Hello, traders, and welcome back if you're a new subscriber, and welcome if you're new to our group. This week, we've decided on addressing a request from the survey specifically surrounding a technical trading question. A couple of you asked about one of the common variables we often see in trading indicators, which goes by a few names, but relates to price. What do we mean by price? Well, you may have seen it as price, applied price, price to use, applied to, and mode, or appears as some other variation, and usually appears under the Settings tab in the Indicators menu. Whatever it's called, it refers to the data set of a specified group of price within a specified candle. Let's back up a bit so new traders can get on the same page. You crusty experts can make yourselves an adult beverage or something, but don't go too far. We'll go through the architecture of a candle so you'll understand what we're referring to when we get a bit more into the weeds. We'll start with the real body. This solid area represents the price range between the open, or first tick price, and the close, or last tick price of the specified period. It could be the 1-minute chart all the way up to the monthly chart. It still represents the same thing. Next, we have the high price point, where price reached the absolute highest price within that period, whether it be a bull or a bear candle. Following the high, we naturally have the low point of the period, as indicated in this image. The areas outside of the real body have their own names. Above the real bodies are wicks, just like, well, a candle. And extending below the real bodies are called tails. Some call both sides wicks, but we all know what you mean. Feel free to screenshot this image for your notes if you'd like. Old school traders tend to find comfort and familiarity with bar charts, and they too contain the same information, displaying the open, high, close, and low. Since we're all here together, let me throw a few candle types at you and see if you can decipher what they're telling us. Ready? I'll give you a moment to think on it. Did you get it? This candle represents a bull candle with an open, high, and a close. The low was at its open price. Here's the second one. I'll pause for a moment. This is a bear candle with an open, high, and a close. The low was the same as the close. Here is the third one. Again, I'll give you a moment to think on it. This is also a bear candle with an open, low, and a close. The open was the high of the period. Now we'll get a little weird. Think carefully on this. Did you get this one? It's a bull candle with an open price and a close price. The low was the same as the open, and the high was the same as the close. We saved the oddball for last. This one has a name. It's called a doji. I'll give you a moment to reflect on this. Alrighty, this candle is neither a bull nor a bear. It represents one of market indecision. It has a high and a low, but the open and close are the same. So, did you get them all correct? If so, well done. If not, you will. Feel free to take any screenshots you need to further your education. The Input tab in the Settings menu is where you'd see the variables for different price sets. Many indicators have 4 different sets. Some have 7 as noted in this one below, and some have as many as 32 differently calculated price data sets to choose from. Let's take a look at where the data comes from visually in a series of candles of the 7 selection menu. The default in most indicators uses the closed prices of each period, identified by each white arrow. Here, the arrow points to the open prices. Next are the high prices for each period. And finally, the lows for each period. Now we'll show you how the median price selection works. Simply stated, it represents the high plus the low divided by 2, giving us a sort of average price of the period. Here, the price data is calculated by adding the close, high, and low all together, then dividing by 3. Notice that the open is missing. This is because the close of one period is usually the same as the open of the next period, or very close. The final choice on the 7 selection menu is the weighted price, and is calculated by assigning additional weight to the close by multiplying it twice, adding the high and low, then dividing it all by 4. We've taken a random indicator and plotted it using the 7 different sets. Looking at them, what are the big takeaways here? What you'll notice is that they appear to have 3 general areas where the lines cross price. the high, the low, and the remainder are kind of bunched in the middle. We hope this peek into a very important part of indicators has been helpful. One last note, you should be aware that not every indicator has the ability to choose a price dataset. If it doesn't, then most likely, it uses the closed price dataset in its calculations. In the eternal words of Bart Simpson, no way, man. We can't make it any clearer than that. Besides, the information for you to be successful can be found on our website and the YouTube channel. You just need to put in the effort. Information on the advanced course can be found on the website as well. Read through the contents to see what it contains. After all, what is your time worth? Don't forget, we've got some really awesome indicators in the library for you to download and try for free. And now you'll know what the price datasets really are. Our only goal is to make you a better trader.